Welcome back to the IB Investor channel. In this video, we'll take a quick look at Storskogen's Q2 earnings report for 2023. The company will announce their Q3 earnings in 10 days, so this will be just a quick reminder of what happened in the most recent quarter and to see if management has done what they set out to do. So for this report, we'll go through the cash flows quickly, the earnings, the debt situation, and see if there's any short situation with this company. We'll check the stock return before we'll go through its financial figures. And we can see here on this picture here from my stockbroker, it's been a pretty rough ride for most of the investors who invested in stock. Of course, the exception would be if they maybe joined in the IPO that happened here in 2021 and obviously sold the stock here at somewhere at the all-time high at 64. That would have been a nice way to make a return for this company, but I would assume that most others have probably lost money for each and every period. As we can see here below, there's been negative returns, and from the IPO, if we just look at the first close, it's been down almost 90%, and this basically means that all the capital almost that you invested, if you invested from the start, has been eliminated. So it's been a really rough ride for investors who have owned the stock for a long time, but also as of late, as I mentioned, it's gone down, and yeah, it's rough seeing these kind of returns. And we can also see that there's been quite a few shareholders holding this stock at my broker. I'm not sure if these figures have increased or decreased over time, but at least there are quite many still who owns this share. When looking at the net sales for this company, we can see that the growth has been pretty good actually from each quarter, trailing 12 months. However, in this latest quarter, we can see that it went down from 1 kroners here down to 0.8 kroners a share. So quite a big drop, and the biggest reason for this is that in the most recent quarter, the company only posted a 0.04 kroners earnings per share, which is much lower than the 0.28 earnings a share that they posted year over year. So the reduction equals to roughly 84% year over year. So it's a massive change in terms of earnings. And if they keep this up, then obviously these bars for the red ones will go down in the coming quarters. The company has had a tough period when it comes to the free cash flow margin. It's been negative all the way here from 2018, 2019, and so on, all the way here up until the most recent quarter here, where we can see that the free cash flow margins were actually positive for the trailing 12 months by 2.4%. But I'm not sure if this is going to be sustainable considering how the earnings are dropping in the most recent quarter. This picture shows the free cash flow in Swedish kroners per share, and it paints a similar picture as the free cash flow margin. It's been negative for many years, and just as of late in the most recent quarter, we can see that the trailing 12 months it's actually been positive, but I'm not sure if this is going to be sustainable going forwards considering the reduction here in earnings in the most recent quarter. Now looking at the cash flows, and just to paint the picture here, the blue one is cash from operations, the orange one are the investments, and the green ones that we can see are actually in the red here, but are green as in color, is the free cash flow. And we can see here that the blue one, the cash from operations, is quite low for this company, and it's been quite sluggish at times. It's gone up and down. And you got to consider here that the company gets bigger and bigger as this is a serial acquirer, and the cash from operations has been, I would say, quite weak. You got to consider as well that this company has sold off some assets as of late, some acquisitions that they divested as well. So the cash flows are probably going a little bit up and down, but we still see that this company is still investing roughly 2 billion or 1.9 billion kroners into the business, and in the most recent quarter and in Q1 they invested roughly 5.2 billion. So this company is still investing a lot of money into their business. We can see here for the past year that they invested a lot of money. So 9.8 billion, 11 billion, 11 billion again, 11 billion. So it's just been massive amounts of money that this company has been posting as investments, and this is for the trailing 12 months all the time. So it's just, this company has kept investing a lot, and we're gonna check later how this affects the balance sheet, but they've done a lot of investing at least. Now looking at the net debt and comparing it to operational cash flows or cash from operations, we can see here that the net debt has gone up quite significantly over the years. So here in 2019, for trailing 12 months, it's 1.6 billion. It more than doubled here. Again, more than doubled here, and yeah, almost doubled here. So the debt is quite high, I would say, for this company. We can see here also the operational cash flows sits at 440 million, comparing it to like 12 billions in debt or net debt. So this big gap here means that it's just going to take much longer time to pay off its debt considering this cash flow. However, some credit to management here. I believe here in the second quarter 2022 we saw a trend here where management have done a great job actually to improve the cash flows, the operational cash flows. So we can see them growing here, and in the most recent quarter here, they had 2.8 billion cash from operations, while the net debt has actually gone down a little bit from the top levels here at 12.7 billion, almost down to just below 12 billion. So it's going in the right direction, and we can see here that the gap is being reduced compared to this period. So that is what investors like to see. The only question is it going fast enough? We know now that the earnings have been dropping, massively, 85% less for the earnings per share, obviously, but we know that it's going to be tough for this company, and they already advised in this quarter, as we'll see for the CEO remark, that it is a tough business for them right now, with sales being reduced going forwards, and that is of course going to affect the cash flows. While the debt levels are still there, they have to service those debt levels, so they need money to reduce it. And if the sales are going down, I mean, it is going to affect this chart for sure going forwards. So this is going to be quite interesting to see how it's going to be for the coming 2-3 quarters, to see if these gaps are closing or not. Now this is the net debt to EBITDA for the trailing 12 months, and we can see that it's been going up and down, and as of late it picked up some speed here. So it currently sits at 2.5 times for the trailing 12 months. And looking at this multiple, I've seen companies that I've hired, I've seen companies obviously with lower, and some companies even with negative net debt to EBITDA, and this is in the higher part sections, I would say, of the companies that I've checked or compared it with. So we have AdTech, which is also a serial acquirer, that sits at roughly 1.6 times, and Lifco at 1.7 times net debt to EBITDA. So there are some other players out there with lower net debt to EBITDA out there in the market, but according to Storskogen, they have their own targets set to 2 to 3 times. So if we look at the 2.5 multiple, then it's just in the middle of that target. So at least Storskogen's management is confident with this number according to their own targets, at least. Before going to the remarks, let's just check the short positions here, and we can see here on the right side that currently 2.6% of the total float has been shorted, which is not too much, I would say, comparing it again to SBB, which is the highest one that sits at 17 or above 17. We have JM that sits at, just above 15%. And then in the previous video, we checked Hexatronic that sat at just shy of 10%. So this company has much lower short interest, and it ranks somewhere between, rank 41 to 60. It's a little bit difficult to tell depending on how the short positions are moving in the market, but it's certainly not one of the most shorted stocks in the market right now. We can see here in the CEO remark that they have made some positive improvements for the first 2 quarters, but they also see some challenges, of course, for some of their business areas. We have to remember that Storskogen is a massive company. They have many small subsidiaries that work within a variety of different things. They have painters. They obviously have some let's see, like some electrical companies here. They have some service companies, and it's I don't understand this company completely. It's just a lot of companies that they have under their management. Obviously, they do have it separated into different business areas, so maybe we should make a video going into this company a little bit deeper in the future. But as of now, I think it's just important to just see what he's saying, and he's saying that they see some weakness here concerning some other areas. So, for example, this trading, I'm not sure what contains within this trading area, but it basically tells the picture here that the consumer is weakening, and it shows in their numbers in terms of negative organic growth, especially for their EBITDA or EBITDA. And it's then regarding the house and home unit then. They do have some business areas here that we can see. Industrial automation have had some benefits here of this industry coming back from Asia, for example, that a lot of companies wants their production being locally produced, so reshoring he's calling it, and also some green sustainability changes here also supports the business industry or business area industry, and that compensate for some of the challenges within the trading business, as he mentioned. And he also here says to the market that they have some strength in their diversified business model. So, I mean, that's according to his words. So it's up to the investors if they want to trust this or not. But I just think it's maybe too diversified. They're also making some strategic overlooks here to check if they're gonna divest some companies, and they have done some divestments as far as I'm aware. So they mention here that some divestments has reduced the debt levels, and they're confident here that it's going in the right direction to meet their long-term goals. They're also talking about some finances here that they've probably refinanced some of their debt levels here, so that they feel confident and happy that they don't have any refinances that will happen during 2023 now anymore, or 2024. So they can probably have a brief moment of period here where they can focus on profitability and focus on some other stuff, and not having to worry so much about refinancing here for the coming months, which is, I guess, good for management here. Yeah, I think I will stop here. So it's going to be interesting just to compare most of these measurements and most of these KPIs that we've seen during this remark, obviously, but most of all for the Q2 earnings, and see how they will change in the next couple of quarters, because this company is really under stress, as we saw here on the share price chart a few minutes ago. the stock is trading down like what, more than 85% or something like this. So the company has a lot to prove. Management has a lot to prove here to gain back some confidence in the stock market, and turn this business around and show the market that cash flows are back on track and are being strong again, and certainly all the per share metrics needs to go up. That I think is very important to gain back much of the confidence here without making too much expansion with the balance sheet, because we have to remember here that the debt levels were quite high. So it is difficult for this company to operate, I think, in this environment. That's for sure. Now, this was it for this video. As I mentioned previously, it wasn't a deep dive. We're not going into the different business segments and market caps and so on, but that's maybe going to be a future video once they maybe release their Q3 or the annual report. Then maybe we can get some better flavors on what's actually happening in this company. But at least these were some of the figures now for the most recent quarter that they posted here for the Q2. So it's going to be quite interesting to see whether or not they will, improve some of those KPIs for the next report. Anyways, if you liked the video, please do hit the like button below or subscribe for more content. Thank you very much for watching. Bye bye.